Across the world, over 1 billion credit cards are in circulation. Swipe by swipe, society has become addicted to borrowed money. In America alone, credit card debt has surpassed $1.1 trillion, with average interest rates creeping above 24%. That's more than triple the average mortgage rate. It's marketed as convenience. But underneath the shiny plastic lies a financial system engineered to profit from your confusion. It's not just about interest, it's about how that interest is structured, triggered, and hidden in plain sight. Big idea, global credit addiction and rising debt crisis. Zoom in. You're charged interest even if you're making payments, just not the right kind. They don't want you to pay in full, they want you to pay forever. And the worst part, most people think they're managing it. Until it's too late. Let's break down the hidden loopholes. The fine print that's silently draining your future. Did you know credit card companies made over $105 billion last year, just from interest charges? That money doesn't come from the rich buying yachts. It comes from regular people, swiping plastic for daily expenses. We're told it's convenient, a way to build credit and earn rewards. But what seems helpful is actually one of the biggest traps in modern finance. The system is designed to extract wealth from your transactions, using rules buried in fine print. Small purchases can turn into long-term debt, preying on misunderstandings about interest and payments. This isn't about hating credit cards, it's about exposing how they really work, so you can use them without becoming a victim. Financial freedom doesn't come from avoiding credit, it comes from mastering it. Before we dive into the tricks credit card companies use, let's get one thing straight. Every swipe, tap, or online checkout is more than just a transaction. It's a calculated move in a game you didn't know you were playing. Credit cards promise instant gratification and effortless spending, but behind every convenience is a hidden cost. The rules aren't designed for your benefit, they're engineered to maximize profit at your expense. Over the next few minutes, we'll unravel the most common and costly credit card traps. From how interest is calculated to the subtle ways your balance spirals out of control, we'll break down the secrets they hope you'll never notice. If you've ever wondered why your balance never seems to shrink, or why fees keep popping up out of nowhere, you're about to find out. Ready to see how the game is really played? Let's pull back the curtain and expose the tactics that keep millions of people in debt, starting with the grace period illusion. 1. The grace period illusion. The grace period is the most powerful trick credit card companies use. It sounds like a free pass. Pay your balance in full by the due date and you pay no interest. But here's the catch. The grace period only applies if you started the month with a zero balance. If you carried over even $1, you lose it. That means every new purchase starts racking up interest from day one. No more free ride. Most people think interest only applies to what they didn't pay off. In reality, once you lose the grace period, every transaction costs more. To get the grace period back, you must pay your entire statement balance in full for 2 months in a row. It's a tough reset, designed to keep you paying interest. One small mistake can cost you big. The system is built to turn a shortfall into long-term profit for the bank. The interest-free period is a marketing gimmick. It works for the discipline, but it's a trap for everyone else. Don't let the grace period illusion catch you off guard. Know the rules, and use your card on your terms, not theirs. Number 2, retroactive interest on previous balances. This is one of the sneakiest credit card traps. Many people think interest is only charged on what you don't pay off. But with some cards, especially store cards or 0% offers, that's not true. If you miss paying the full balance by the end of a promo, you get charged interest on the entire original amount, all the way back to the purchase date. For example, buy a $1,500 laptop on a 12-month no-interest deal, pay it down to $50 but miss the last payment. Suddenly, you owe hundreds in back interest. One slip erases all your progress. Your hard work is wiped out by a single mistake. This isn't just for promos. Residual interest can hit regular balances too. Even after paying your statement in full, a small interest charge can show up next month. The only way to truly clear your debt is to call and ask for the exact payoff amount. These sticky trailing charges are designed to keep your account generating fees. It's a deliberate complexity meant to trip you up. Always read the fine print on promotions and know how interest is calculated. Don't let a technicality cost you hundreds. Stay vigilant and proactive. Number 3. Multiple interest rates. One bill. Your credit card isn't just one account. It's actually a bundle of debts, each with its own interest rate. Purchases, cash advances, and balance transfers all have different APRs. but you only see one total balance on your statement. For example, purchases might have a lower rate while cash advances are charged much higher interest from day one, and balance transfers come with their own special rates and fees. But your bill just shows a single, combined balance, hiding the complexity. When you make a payment, the minimum goes to the lowest interest debt first, leaving the highest interest debt like cash advances, untouched and growing. By law, extra payments above the minimum must go to the highest rate balance, but only the amount above your minimum payment. So if you only pay the minimum, this protection doesn't help you. The most toxic high-interest debt lingers the longest, racking up more interest every month. Cash advances are especially dangerous. No grace period, high fees, and sky-high rates. Always know your card's different APRs and avoid cash advances at all costs. The system is designed to maximize profit, not to help you get out of debt. Be strategic with your payments to avoid falling into this multi-rate trap. Remember, understanding how your payments are applied is key to escaping the debt cycle. Make every dollar count, pay more than the minimum, and target the highest interest balances first. Number 4. The daily interest calculation trick. This is one of the most overlooked ways credit card companies make money, by charging you interest every single day. Most people think credit card interest is calculated monthly, but it's actually calculated daily. Every day, your balance is recorded, and the average of those daily balances determines your interest. If you make a big purchase early in your billing cycle, you'll pay more interest than if you made it at the end. Even carrying a balance for just a few days costs you money. Paying off your balance mid-cycle stops new interest, but you still owe for the days you carried debt. That's why paying your bill as soon as possible is so powerful. It lowers your average daily balance and your interest. Credit card companies count on you thinking in monthly terms, while they profit daily. The timing of your payments and purchases matters more than you think. Don't let the daily calculation trick cost you extra. Pay early, pay often, and keep your balance low. This simple habit can save you hundreds in interest. Don't play by their rules, beat them at their own game. Quick question for you. Which type of credit card interest are you struggling with the most? Is it daily interest, retroactive interest, or something else? Let us know in the comments below. Number 5. The minimum payment trap. This is one of the most dangerous features of a credit card, and the one that keeps millions in debt. Credit card companies highlight the minimum payment as a safety net, but it's actually a trap designed to keep you paying for decades. It looks like a lifeline, but most of your payment goes to interest, not the actual debt. For example, if you have a $5,000 balance at 18% APR and only pay the minimum, say $100 a month, it will take over 25 years to pay off, and you'll pay more than $7,000 in interest. The system is built to make you a long-term, high-profit customer. Minimum payments create a false sense of security, letting debt quietly grow month after month. Each month you pay interest on your previous interest, digging deeper into the hole. The only way out is to pay more than the minimum, every single month. Treat the minimum as an emergency option, not a strategy. The goal is to pay as much as you can, as fast as you can. Don't let the minimum payment turn your debt into a life sentence. Break the cycle by being aggressive with your payments. Your future self will thank you. Bill. Number 6. The lifestyle you can't actually afford. Credit cards create the illusion of wealth, making it seem like you can afford a lifestyle beyond your means. They let you buy things you can't actually afford, all with a simple swipe. Swiping a card disconnects you from the pain of payment, making overspending dangerously easy. This leads to lifestyle inflation, living beyond your means, all funded by debt. You might look successful, but it's all built on borrowed money. Soon, your income goes to paying for the past, not building your future. Savings disappear, and emergencies become disasters because you have no cushion, just more debt. A high credit limit isn't security, it's a high-interest loan waiting to happen. True security comes from living within your means and building real savings. Credit cards normalize debt and make overspending feel painless. The real danger isn't just the interest rate, it's how cards change your behavior. Escaping this trap means breaking the mental dependency and realigning your spending with reality. Don't trade long-term freedom for short-term gratification. Use credit as a tool, not a crutch. If you're finding this video valuable, please click the like button and subscribe to our channel for more insightful content. Number 7. Hidden fees you don't notice. Credit cards don't just make money from interest, they're packed with hidden fees that can quietly drain your wallet. Here's what to watch for. Late payment fees, penalty APRs, cash advance fees, balance transfer fees. foreign transaction fees, annual fees, and over-the-limit fees. Even a single late payment can trigger a sky-high penalty rate on your entire balance. Cash advances hit you with upfront fees and immediate interest, while balance transfers and foreign purchases come with their own hidden costs. Each fee might seem small, but together they add up, making your debt stickier and harder to pay off. These fees are designed to profit from mistakes and emergencies. Read your cardholder agreement and know what triggers each fee. Avoid them whenever possible. Every dollar in fees is a dollar you could use to pay down debt. Don't let hidden fees quietly drain your finances. Stay alert and keep more of your money. Imagine standing at the entrance of a vast, winding maze. Credit card debt feels just like this, easy to step into, but every turn makes the way out harder to find. The walls close in, and the exit seems to vanish unless you have a plan. It's simple to swipe your way in, but escaping takes intention and effort. Without a clear plan, you'll stay stuck, making payments that barely dent your balance. The system is built to keep you treading water, not moving forward. Step 1. Know your numbers. List every balance, APR, and fee, get it all on paper. Step 2. Pick a payoff strategy. Try the debt snowball. Tackle the smallest debts first for quick wins. Or use the debt avalanche. Focus on the highest interest rates to save the most money. Step 3. Be relentless. Make minimum payments on all cards, but throw every extra dollar at your target debt. This might mean cutting expenses or finding ways to boost your income. Every extra payment is a win. Each one brings you closer to freedom. With a plan, you're not just paying bills, you're breaking the cycle and dismantling the trap. The credit card system is designed to outlast your willpower, but a focused plan is your way out. Take control, make your escape intentional. That's how you win the game. Knowledge alone changes nothing. But when you act on what you know, you transform your future. This is the moment to take control, because every decision you make from here can move you closer to financial freedom. Here are practical steps you can take today to master your credit cards. 1. Always pay your statement balance in full every month. Treat your credit card like a debit card. Never spend more than you can pay off. 2. Swear off cash advances. They come with high fees and immediate interest. 3. Build an emergency fund so you never have to rely on your card in a crisis. 4. Understand your billing cycle. Timing your purchases can save you money if you ever carry a balance. 5. Don't be afraid to negotiate. Ask for lower rates or fee waivers if you have a good payment history. 6. If you're in debt, pick a payoff strategy and stick to it. Track your progress and automate payments. 7. Use budgeting tools to find extra money for debt. 8. Automate payments to avoid late fees and missed due dates. 9. Make your debt payoff process as systematic as possible. 10. Small changes add up to big results. Take action now. Your financial freedom starts today. Conclusion. The illusion is broken. Let's recap what we've uncovered about credit cards, and how you can take control. First, the grace period illusion. Miss one payment, and you pay interest on everything. Second, daily interest. Costs add up faster than you think. Third, the minimum payment trap, keeping you in debt for decades. Fourth, lifestyle inflation, spending money you don't have. Fifth, hidden fees, small charges that quietly drain your finances. And finally, the maze of complex rules designed to keep you paying. But knowledge is your key. When you understand the system, you can use credit as a tool, not a trap. Build a budget, make a payoff plan, spend with intention. Every smart choice moves you closer to freedom. The real trap isn't the plastic card, it's believing in easy money. Break the cycle before it breaks you. Your financial future is in your hands. Take action, choose wisely, and build the life you deserve. Enjoyed this video? Don't forget to like and subscribe for more valuable content every week.